But when we look at production, of course, it's not just Apple. A lot of companies grappling with this in China. Tesla, another one of those companies that was able to get back.
And Disney.
And Disney as well. But we're seeing Tesla up another 6% today after two Wall Street analysts raised their price targets. Morgan Stanley's Adam Jonas hiked his most optimistic projection for Tesla to $1,200 a share. That's up from his previous target of $650 a share. Separately, Sanford C. Bernstein analyst Tony Saganaki raised his target up to $730. That's up from $325 he had on the stock before. Ross, I mean, you've been in this one for quite some time. You were seeing this move before a lot of people did. Of course, Tesla's up over 100% in the last 12 months. When you're looking at this, and now you're seeing some bigger names hop on board here, what are your thoughts? Because, as you said, analysts could be wrong, but as we're seeing more and more analysts update their price targets, does that give you some pause and think this might be a bit of a top here for Tesla, or are you still going with it?
Well, I don't think it's a top when you're thinking as a long-term investor. I think on the short term, the markets are a little crazy. You got Virgin Galactic going up, and they don't even do anything yet. So it's like, we've got a speculative thing going on, and Tesla's kind of in the middle of it, and it's a great company, and they just started China production, and they are making cars right now and delivering cars in China, but by no means do I think whatever numbers even they were thinking are going to happen. Fortunately for them, it's new, so it's only like a net positive any cars really made in China right now. And I think longer term they're in fine shape. But I think my top three holdings are Tesla, Disney, and Apple, and I think they're all affected by this. And we love these companies long term, and we think there'll be a great opportunity to buy these companies in the next 3 to 6 months as the market readjusts to the new reality. Because I think longer term, these are great investments, and we're going to hold them for hopefully forever.
Yeah. I mean,
Jonas upgrading after he just got a secondary offering from Tesla is no surprise. You know what I mean?
Well, I mean, that's one of the question marks here, too, is right. You talk about market timing and how hard it is and why, if you're already holding the stock, it would make much more sense to hold it rather than try and figure out what's going on here. But if you're coming in from the outside, that's a much different story if you're going to try and just hold on to see whatever pullback, especially if you're talking about all the fears around some of these companies with exposure to China. But that was the interesting point, though, because when we talk about Tesla, that was the element that a lot of analysts really were saying is the black box. They didn't know what China would hold for what might happen when they got the Gigafactory up and running, which was much sooner than a lot of people expected. But it's resuming deliveries of its China-built Model 3 vehicles after that pause in production that we saw from the coronavirus. Moving forward, though, once they do get that cleared up, I mean, are you seeing anything out of the way they've been able to get this up much quicker than a lot of people expected, and the demand in China specifically that might make you more bullish than you were before?
Well, I mean, I'm super bullish on demand in China and globally, especially in Europe as well, as far as Tesla's products are concerned. But considering they banned driving in a lot of the country, it makes, buying a Tesla seem like a secondary issue compared to worrying about your family's health, know? So, I mean, I'm just being realistic. I'm a long-term shareholder. The stock is kind of priced for perfection right now. And I think there's going to be a better chance for investors to get into this stock, because I do have clients clamoring, even though we own a ton of it, they still want more, which also makes me nervous. So I would say the strategy I use if I'm not an investor in Tesla and I wanted to become one would be to dollar cost average, just if you buy a little bit today and buy a little bit next month and buy a little bit the month after, because the volatility is going to be huge. And I can't tell you which way it's going to go, but we've taken our profits, so we're in a comfortable position with our Tesla holdings now, and we're going to ride it out either way. So, be in a position you want to be in, but I'm telling you, we're playing defensive right now. It is not the time to be speculating with like options and all this crazy stuff.
Yeah, and as we're seeing it, Apple, the first company to warn here with some real numbers behind what could be happening in Q2. We'll see what happens and what other companies might follow. But Ross Gerber, thank you so much for joining us. Appreciate you breaking that down.